Well, good morning, everyone. It is quite a crazy morning. And this is the program's going to go long today, but I'm going to just recommend that you hang in there because if you want to really have a handle on the market, on the economy, on Tesla, all of this data is useful and it gives you an opportunity to really be able to analyze it carefully in terms of your expectations or your plans or what you might want to do. All right, we're going to start off, of course, as usual, with Tesla news, and Tesla's stock is up nicely this morning. Last time I checked, up 7 points, $7 after a wild and wacky week. So we'll check on it, of course, later. This is from Marv Van Horn. He says, "Why do so few Tesla owners not use their FSD?" I think what he meant was, why do so few Tesla owners use their FSD? Anyway, I went to a Tesla delivery center yesterday to take a demo drive of the Model 3. I asked the salesman what was his experience with Tesla owners using FSD. Did he have any insights about their lack of use? He said usage rate was low. The biggest reason for the lack of use was fear of what the software would do or not do under their control. How do you deal with that fear and change their behavior to give it a go is his question. In his opinion, more videos of faultless FSD drives won't do it. At least it didn't work for his wife. Yeah, well, it didn't work for me. Videos alone doesn't overcome a Tesla owner's reluctance or their fear of use any more than endless YouTube videos of skydivers jumping out of planes and landing safely encourage more people to take a dive. Well, certainly for somebody who's thinking that they would like to take a dive, those things might help them, but to his point is still valid. Watching videos doesn't lead to significant new skydiver update. It has a marginal impact. Okay, so he agrees. It takes a lot of real-time exposure to many safe drives to come, and I don't know, see, it takes a lot of real-time exposure to many safe drives to overcome the I don't know what it's going to do fear of not using it. And listen, I did this. I've gone through this, but I'm now 100% using it. But to his point, it got good enough. He says he took a 1,000-mile trip, 100% on FSD before his wife finally got comfortable enough to get out of the right seat and into the driver's seat and pilot the FSD herself. When she could drive for several hours on FSD and I could nap without being awakened with her screeching in panic at some slight unexpected jerk of the wheel, I knew we had another FSD convert. Anyway, I thought that was enjoyable and useful to understand, but they changed the quality. The improvement is so dramatic now, I think way more people are going to start to have an easier time converting. All right, this is from Fox News. Shark Tank investor and O'Leary Ventures chairman Kevin O'Leary reportedly hopes that Elon Musk will become part of a future Trump administration. He says, "I'm a huge fan of Elon Musk." In a reaction to Tesla CEO's interview with former President Trump, he says, full disclosure, he says his son works for him and loves his job at Tesla. And I think that Elon's a modern day Bruce Wayne. If he got involved with government, it would be a good thing for everybody in America. This guy's a no BS guy. He's talking about Musk, of course. He's a very transparent guy, and he really knows what he's doing. He has executional skills. Yes, you may not like him. You may not like his communication style, but look at what he's accomplished. And you could just take that whole paragraph and say it about Trump. This is what I keep telling people is, yeah, I know all the bad stuff. He has a mission, Trump. He states the mission. You know exactly what he's going to do when he gets into office, and then he's going to execute. You already saw it happen. It's what's going to happen again. Do you know this about the other side? Anyway, if we could get more Elon Musks in government, this country would not be in the situation it is, divided. It wouldn't be so divided. I don't know why he thinks that Musk would help the country be less divided. This is Randy Kirk. Hit like, hit subscribe, hit notify. Do all those things. And then, of course, this morning, Sir Basher. And then tonight we've got, what's his name? Yeah, you know the guy, Bradford Ferguson. Bradford Ferguson put out a video. I'm sure we'll be talking about that video where he thinks Elon Musk might sell some more shares to raise money for X. I don't think so, so it'll be a good discussion. All right, here we go. Are you ready for all the economic data? I mean, there's a lot, but I'm telling you, you should hang in there. Oh, did you also go down below and hit Patreon? That would be such a great help. Advanced estimates of U.S. retail and food services sales for July 2024, adjusted for seasonal variation, but not for price changes, were 709.7 billion, an increase of 1 entire full percent. That's what it said right there in the census report. One whole entire, up 1% and up 2.7% from last year. Total sales in May through July were up 2.4% from the same period a year ago. And the May 2024 to June 2024 price change was revised from unchanged to down 0.2%. So we had this fall off in the May-June category, especially in June, I think. And now they're suggesting that July might have started picking up again, at least ex auto. Retail sales were up 1.1% from June of 2024 and up 2.6% from last year. Non-store retailers, we're talking about Amazon, were up 6.7% from last year. Food services and trading places were even up 3.4%. Yeah, okay. Wow. So that's why the market started up very strongly this morning, and was up 500 points at one point at a time, at the most, but has fallen back. And I've already been saying that on X this morning. I think when the overall picture has been taken of today's activity, the market might actually be down at the end of the day. And that's just because it's not great. Well, it depends on what you want. Anyway, let's go on. Reuters. Economists polled by Reuters had forecast retail sales, which are mostly goods and are not adjusted for inflation, advancing 0.3%, but they went up 1 full percent. Signs that demand is not collapsing could prompt financial markets to dial back expectations for a 50 basis point interest rate cut this month, or in September. The odds continue to favor a quarter rate reduction, with inflation rising mildly in July. Consumers are maintaining spending by bargain hunting and trading down to lower price substitutes. You'll see this more later. Retail sales, excluding automobiles, gasoline, building materials, and food services, rose 0.3% last month, after advancing by an unrevised 0.9% in June. So you can see here the auto, building materials, and food services actually down, not up in June. Okay, that's important. Also from Reuters, initial claims for state unemployment benefits dropped 7,000 to, did I say that too loud? To a seasonally adjusted 227,000 for the week ending August 10. The economists polled by Reuters had forecast 235,000, though this was lower than expected, again, meaning the economy doing better than expected. Oh my goodness. Well, this is me speaking now. A jump in the unemployment rate to a near 3-year high of 4.3 in July stoked fears of labor market deterioration. Then financial markets all of a sudden started thinking, well, we'll get up a 50 basis points. In fact, we had people calling for 75 immediate. Layoffs, however, remain low by historic standards. The forced rate monthly rise in the jobless rate was driven by immigration-induced increase in labor supply, which is not matched by hiring. Businesses have scaled back on hiring as the 525 basis points worth of rate hikes from the U.S. Central Bank in 22 and 23 curbed demand. Yeah, maybe. The Fed has maintained its benchmark overnight interest. We know that. The number of people receiving benefits after initial week of aid, my main thing, and the Fed looks at this, which is a proxy for hiring, fell 7,000 to a seasonally adjusted 1.864 million. Yeah, so the so-called continuing claims are near levels seen in late 2021, indicating that more people are experiencing longer bouts of unemployment, but it dropped this week. So that's another indication the business environment is stronger than expected. But then we have this from New York State. Business activity edged slightly lower in New York State, where it's been miserable according to firms reporting to the Empire State Manufacturing Survey. The headline General Business Conditions Index was little changed at negative 4.7. New orders declined modestly. Shipments held steady. Delivery times shortened. Supply availability was little changed. Inventories moved lower. Labor market conditions remained weak, with employment continuing to contract. Average work week dropping sharply. Input prices increased at a slightly lower pace than last month, but selling price increases remained steady and small. Firms were fairly optimistic that conditions would improve in the months ahead. That's a good thing. That's a positive right there. But this part of the country has been messed up for a while. So then you can go into I'm sorry, is this the Philadelphia one? I'm sorry. Survey, yeah, I think this is the Philadelphia Fed. Manufacturing activity in the region softened overall, according to the survey in Philadelphia. The survey's indication for current general activity, new orders and shipments all declined, which in the Philadelphia area had been the place that was strong. The employment index suggests declines in employment overall. Both price indexes indicated overall increases in prices and remain near their long-run averages. The firms continue to expect growth over the next 6 months, but expectations were less widespread this month compared to last month. Okay, yeah, so then we've got I'm sorry, I didn't do a good job here. Most current indicators decline. The diffusion index for current general activity fell from 13.9 to a negative 7, the first negative reading since January. So this Philadelphia area, which had been strong, is now seeing the opposite. Okay, then we got Walmart reporting their numbers this morning. This is from CNN. Walmart's U.S. sales at stores open for at least 1 year increased 4.2% last quarter, and its operating income surged 8.5% during the quarter. Walmart's U.S. digital sales are booming. They grew 22%. The company raised its sales and profit guidance for the year. This is very important. A sign it expects great growth. Duh. Walmart is America's leading retailer and a great gauge of consumer sentiment, more duh. But shoppers are looking for deals, and that's what's helping them. They're looking for deals after years of higher prices and interest rates and now a slowing job market. Although inflation has fallen, Americans are still paying more than they were for groceries, housing, and many goods. That has put Walmart in a sweet spot as customers, this is CNN's view, as customers have scoffed at $6 iced coffee at Starbucks, $15 Big Mac meals at McDonald's, and other items. They're buying groceries, household essentials, and other products at Walmart because they feel they're getting a good value. Okay, then we've got the import prices coming in this morning. Also, import prices ticked up 0.1% in July. That's fine. After being unchanged last month, so good numbers coming from the import price gauges. Also, all imports excluding fuel, those also the same, 0.1% after increasing 0.2% in June. So that was good news. There's some good inflation news. Okay. Then we have the industrial production. This is overall United States. Industrial production fell 0.6% in July after increasing 0.3% in June. It was expected to be down 0.1%, but it's down 0.6%. Early July shutdowns concentrated on petrochemical and related industries due to Hurricane Beryl were probably responsible for 0.3 percentage points of that 0.6, but it would still be down more than, down heavily. 0.3% would be down big time. And the overall, and so the market was probably expecting the Beryl information and thought it would only be down 0.1. Manufacturing output stepped down 0.3%. The index for motor vehicles and parts fell nearly 8%. Manufacturing excluding motor vehicles and parts rose 0.3%. So the rest of the economy was doing okay last month in manufacturing, but the autos are what is pulling it down. The index for mining moves sideways, with the index for utilities decreasing 3.7%. Okay, so what the heck? After all of that, we may not really know what the Fed is going to do in September. Overall economic results are all over the place. It looks like industrial production, manufacturing continue to be in recession. The information out of both Philadelphia and New York, not good, but optimistic, interestingly. But small business owners on Tuesday said, nope, not great. Things are not great out there. We've got labor statistics coming in a little stronger than expected this morning, but still not great, but better. And so and then all these retail numbers coming in strong. But why is that? Is that because of, as they point out with Walmart, that people are buying in the retail environment rather than eating out? Who knows? Okay. It's an interesting economy. It's very hard to call. And I'm going to wait until 2 weeks from now. And my final call on the Fed is going to come 2 weeks from tomorrow when we get the information about the jobs report. We'll see if the jobs report is stuck at 4.3 and we continue to see strength in the economy, there might not be a cut. If it goes to 4.4 and they're still strengthening the economy, they're not going to cut. I'm sorry, did I say that backwards? I'm sorry. If it goes to 4.4, we'll get the cut. I don't care what else is happening. If we go to 4.4, they're going to cut. 4.3, maybe. If it drops and 4.2, and the economy still shows all these evidences of being stronger than expected, I think we don't get any cut at all in September, maybe not even in November, probably December, because these interest rates are not that high. I know I keep saying that, but it's true. All right, that was it. Was that enough? Holy mackerel, so much stuff coming in. All right, here's where we are in the second hour, almost ready to start the second hour of the market this morning. We have got the Dow. Well, we always start with Tesla. Tesla's up only $12.50. Only $12.50. Go ahead. Explain this week to me. I'm done trying to figure it out. $12.45 right now. Okay, Dow is up 336, but it had been up 500. NASDAQ up 298, but it is actually at the high for the day. S&P up 60, and it's been kind of flattish. It's not like jumping around like the other two. All right, and then we've got Apple up 3, Google 24 cents, Amazon up strongly, Meta up 10, Microsoft up 378, and NVIDIA only up 285. Then we go to the Cathie Woods all up, 100% up, right down the line. So there's a lot of green on my little computer this morning. Okay. Okay, I just saw some breaking news and I thought it might be important. Okay, let's look at the percentages. Whoops, the percentages are Dow up 8.83, NASDAQ up 1.75 this morning. Where's the rotation? Come on, rotation. What's happening here? S&P up 1.1, not bad. Tesla up 6.09%. All right, so I already know what's happening with the bonds, and it is not good. Okay, well, it's a little better than it was. So 10-year is up almost 10 basis points, 9.7 basis points at 3.919. And this is what I'm talking about. The bond market is saying rate cuts might be off the table. That's what they're saying here. Up 10 basis points. They were up 12, up only 10 now, but that's big. 2-year is up 12.5 basis points at 407.2, and the inversion is widening again. This is by far the record. We are now breaking all records with regard to the length of this inversion. And meanwhile, the 2-month is only up 2.3 basis points, but still up massively, like 140 basis points compared to the 10-year, which is nuts. All right, so someday the economists will rewrite this period with regard to this whole inversion thing. We just don't know what economists are going to decide. I'm not an economist. So I don't know. Okay, so if we go on to the oil situation, up 67 cents this morning, 77.64 for Texas and $80.56 for Brent. So pretty much where it's been for a few days. Natural gas up another 1.17. Holy mackerel, we're at $2.24 now on natural gas. Gold up for 40, backing down from all-time highs, but still at 2,484. That's strong. Silver up 3.3% this morning. What is going on with silver? Copper up 2.82%. What in the world? So copper is back up to $4.15 and silver 28.24, heading towards 30 bucks. The dollar up against the yen and down against the euro, up a full percentage point against the yen, down 0.33 against the euro. The Bitcoin up 530, but still under 60,000 at 59,465. And that is the full report on this morning's action, with Tesla continuing to just go like this. It's just off to the races at $13 up. That is 6.5%. And what in the world will Tesla be at by the end of the day? Your guess is, of course, as always, as good as mine, although I might spend a little more time every day studying this. All right, that's it. Please remember, oh yeah, let me just say once again, we've got Cern later today. We've got Bradford Ferguson tonight. Yesterday, we had a super duper report from Brian White. You want to go check that out. I'll put the card right here, and then go down below, Patreon. I'm going to whisper it just as a reminder, Patreon. That's all I got for you. It's been great talking to you.